Wall Street Barackard Dalam Lubang Sadala Potato Powell Wyoming Wall Street ended Friday with all three benchmarks more than 3% lower, as Federal Reserve Chief Jerome Powell signaled that the central bank would keep hiking rates to tame inflation next nascent hopes for a more modest path among some investors. The Nasdaq led declines among the three U.S. benchmarks, registering its worst daily performance since June 16, weighed by high-growth technology stocks which tumbled after rallying the previous day in anticipation of Powell's scheduled speech to the Jackson Hole Central Banking Conference in Wyoming. The U.S. economy will need tight monetary policy for some time before inflation is under control, Powell said at the event. That means slower growth, a weaker job market and some pain for households and businesses, he added. Investors knew further rate rises were coming, and they have been divided between whether a 75 basis point and a 50 basis point hike by the Fed was coming next month. However, recent data highlighting continued strength in the labor market, to offset 2 consecutive quarters of negative economic growth, had led to some speculating a more tempered pace of hikes could be forthcoming. The pushback is coming from the idea that it's not about the pace of hikes going forward and how they tighten financial conditions, it's about the duration of remaining at that restrictive policy stance, said Garrett Melson, portfolio strategist at Natixis Investment Managers. That's the nuance they are trying to push forward, and Powell was, maybe, a bit more explicit in that today. But if you've listened to other Fed speakers in the last couple of weeks, it's the same message. With investors repositioning after absorbing the speech, the CBOE Volatility Index jumped 3.78 points to 25.56, its highest close in 6 weeks. All the 11 major S&P 500 sectors were lower, led by declines of between 3.9% and 4.3% in the information technology, communication services and consumer discretionary indexes. The S&P 500 lost 141.46 points, or 3.37%. To end at 4,057.66 points, while the Nasdaq Composite lost 497.56 points, or 3.94%, to 12,141.71. The Dow Jones Industrial Average fell 1,008.38 points, or 3.03%, to 32,283.40. High growth and technology stocks dropped. Nvidia, Nasdaq, NVDA, Corp and Amazon.com Incorporated, Nasdaq, AMZN, fell 9.2% and 4.8%, respectively, having led gainers in the previous session. Meanwhile, Google parent Alphabet, Nasdaq Google, Incorporated, Meta Platforms Incorporated, and Block Incorporated also dipped between 4.1% and 7.7%. U.S. stock indexes have retreated since the turn of the year as investors priced in the expectation of aggressive interest rate hikes and a slowing economy. But they have recovered strongly since June, with the S&P 500 recouping nearly half its losses for the year on stronger than expected quarterly earnings and hopes decades-high inflation has peaked. However, Friday's falls wiped out the modest August gains which all three benchmarks had previously carved out, and sent the trio to their second straight week of declines. For the week, the Nasdaq slid 4.4%, the Dow lost 4.2%, and the S&P 500 fell 4%. Data earlier showed consumer spending barely rose in July, but inflation eased considerably, which could give the Fed room to trim its aggressive interest rate increases. Dell Technologies, NYSE, Dell, Incorporated fell 13.5% as it joined rivals in predicting a slowdown as inflation and the darkening economic outlook prompt consumers and businesses to tighten their purse strings. Affirm Holdings Incorporated tumbled 21.3% after the buy now pay later lender forecast full-year revenue below Wall Street estimates, underscoring the broader downturn in the fortunes of the once high-flying fintech sector. Volume on U.S. exchanges was 10.37 billion shares, compared with the 10.64 billion average for the full session over the last 20 trading days. Fed's Powell says taming inflation could lead to some pain. Federal Reserve Chair Jerome Powell said the central bank's efforts to quash inflation will require a sustained period of below-trend growth that will lead to pain for households and businesses. These are the unfortunate costs of reducing inflation, Powell said during a speech at the Fed's annual meeting in Jackson Hole, Wyoming, but a failure to restore price stability would mean far greater pain. Last year, Fed officials insisted inflation would be temporary, but high prices have persisted far longer than they expected, something that has forced policymakers to act aggressively to cool the economy. He said Friday that the economy continues to show strong underlying momentum but the labor market is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Powell's message was that the Fed would continue to fight inflation to get it back to its targeted 2%, and would keep at it until the job is done. There is debate on just how far the Fed will go at the next policy meeting in September. The futures market indicates a 58.5% chance of another 0.75 percentage point increase, which would be the third such increase in a row. There's a 41.5% chance the Fed makes a smaller, 0.5 point increase. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook, Powell told the audience Friday. There is some evidence inflation is leveling off, especially as energy prices have come down in recent weeks. The housing market is also cooling as rising interest rates and high sales prices push would-be buyers to the sidelines for now. But as earnings reports from retailers showed, consumers feeling pressured by rising food prices are putting off purchases of other items, such as clothing and electronics.